What's up, guys? Welcome to your Bitcoin update. We're going to be taking a look at the price action, see what's going on today. I'm also going to take a look at that wave count that I've been looking at forever, as this being a big ABC as an irregular correction. We talked about that. I'm going to go into that. Also, I'm going to look at the possibilities. If we go up more, where could we go? And we're also going to take a look at the Dow Jones. We're going to take a look at the market crash from 2008. We're going to compare gold, silver, and the Dow Jones, and then the dollar, just to see what happens when markets do crash, so you guys know what to expect if we get a crash. But anyways, let's get into it. So looking at this, as you can see right here on the daily, we had higher highs in the price action, lower highs in the RSI. That is bearish divergence. That does not mean it has to continue down from here, although it could. We'll have to watch for the daily divergence here. But something else I wanted to point out is if we look at it on the 3-day, oops, that's a 3-hour. If we look at that on the 3-day, you can see there's massive divergence there also. And if we look at it on the weekly, you can see we also have big time divergence here. Now let's take a look at the weekly candle. Obviously the week hasn't closed. We'll have to see how this closes. The 8 EMA on the weekly is around the 58.5 range. But let's get into the chart. I want to show you this count. You'll see all this stuff laying all over on the chart. I'll make sense of that here in a minute. What we've been looking for is an ABC. Although I did think the A was going to end between 50, or the B was going to end between 50 and 55,000, we did go higher. So I do believe that is an irregular correction. And reason being, you know what? First, we're going to take a look at the bullish case. I know everybody's super bullish, so we'll take a look at that first. I was looking at this to be possibly a fractal here, starting right from here, which would be right down here, and doing another distribution phase. That is a possibility. That would get us somewhere in the 73 to 74,000 range. The other thing where I was talking about, we could get one more push up. We'll put the fibs on here real quick, go from the swing low right over here to the swing high, which I believe to be the smaller ABC. But if you look in here, the 1.27 is, they say that the C wave can go from 100, I'm sorry, the B wave can go from 100 to 125%. Could still go a little higher, but I'm going to keep it at the 1.27. That's at about 70,500 range. If we do get another push up, that's where I would be looking for a rejection. Although, like I said, we could go as high as the 75. Although, this could be done. I'm going to do a quick wave count of it and just show you how I got it. You guys know I measured these waves out. This third wave went to the 1.613, or I'm sorry, the 1.618. And then we had our bounce perfectly. And our 5 did not go as deep as we were expecting if you watched my videos back then, but all the 5 has to do is go past 3 here, which it did. And that's why I remained bearish, because I do believe this is what we're looking at. This is an irregular correction. It can be in a 335. Some people think it can only be in a 335. That's not true. It can be in a 535 also. Here was the end of 5th wave right here. Then you get your 5 waves down, your ABC up, and within your A, you have 5 waves. In your B, you have 3 waves. And then your C, you have 5 waves. We're going to take a look at that. And like I said, right here, it says C can complete before the end of wave A, but must achieve 61%. So we're going to take a look at that too. Let's look at what 61% of this would be if we've topped out here. So we'll go from the swing low to the swing high. And the 61% would be about 42 to 44,000. Let me get that off there. I'm going to count these waves real quick so you guys can see how I got it. As you guys know, this was the 5 waves down. This is why I remained bearish. And then we have our 5 waves down. And then if we look in here, this would be A, B, and C. Well, in the A wave, we need 5 waves. So I've counted these out, measured them out. There is your 5-wave structure. Your 5th wave was an ending diagonal in A. And then you got B, a 3-wave structure. So the B, where is my B? There it is. This is the B wave right there. A, B, C in your B. It needs to be 3 waves. And then we'll bring over 5-wave count right here. Now again, this 5th wave could go all the way up to that 70.43. It may be done. It doesn't have to be done though. So I'm watching to see how this could be extended, like I said, to 74, 75,000 also. But as of right now, this is what I'm looking for. In the main trade I'm looking for, I'll do smaller trades within this, but the main trade I'm looking for is a wave 1, 2. Once we discover 2, like we did over here, this 3 wave is the best wave to ride. And if this plays out the way I believe, I did measure these. Let me get this out of the way real quick. But remember, we could still continue up a little higher. Let me get that out of the way. These were measured out, and this is just kind of a guess right now. It's pure speculation, but what I will be looking for is a wave 1 and 2 like we did over here. And then I would be looking, if this plays out, to short 3 all the way down. Now, these numbers can change depending on where the first wave goes. We don't know where it's going yet. Let's put the fibs on there and see if that lines up with anything. All I did was took the percentage of the last wave 1 over here. And so this could be around 53 to 54, and it could take a little bit longer. Could go around in there. But like I said, we will watch and see how it all plays out. We could also go back from here up to the bottom of this wave, which should be right here. And that would be right to the 0.618. So that 51 would make sense if we continue down from here without getting that higher high. If we get a higher high, then we'll have to remeasure. But this ultimately is the wave I'm looking for. That could be a $20,000 short easily. And you may hold it all the way down to 5, depending on how it plays out. If this plays out as it plays out, we will watch it. But as you can see, there's our 5 waves for A, 3 waves for B, 5 waves for. So what that makes is a big A, B, C in the middle. And that makes this whole structure a big A, B, and C. And after that, it could go up. But remember, this could, if this breaks this low over here, it could go down quite a bit more. But as of right now, it's looking in between, somewhere in between the 22 to 29,000 again to match this low. If this is the case, and then up from there, it may be a long year or 2 accumulation after that. This could take a lot longer too. We'll see what happens. But anyways, this is what I wanted to go over real quick. This is the Dow Jones. As you've seen, it dropped a little bit today. We'll see how it reacts tomorrow with the Evergrande stuff. People have been talking about that. And it's kind of funny. Somebody sold a bunch of Bitcoin and they came up with the money to pay their interest. But anyways, so this is 2008. In 2008, the Dow fell 55% from 2008 to 2009. Another thing I want you to keep in mind is the date on the bottom here is around February to March of 09 is when it bottomed, right? Let's look at silver. Silver dropped 61%. When was its bottom? Right around the same time, between December and February, right here. Let's take a look at gold. Gold also in 2008 fell 35%. And the bottom was right around the same time, November, December, right in that area. Now let's take a look at the DXY. Guys, I always talk about the DXY rises when the markets fall, because what people do is they sell their assets. That's why highly speculative assets will be quick to go if the market crashes. And when that happens, that raises the dollar. So while that market was crashing, the dollar rose 27%. And then right around the end of that, between November and March, the dollar topped out and started falling down while the markets moved up. That's what happens when the market crashes. I've been looking at these fractals here. This was from back in 2016 all the way to 18. It was like a 2-year wedge. Same thing right here. We broke out of the wedge. You guys know I've been bullish on the dollar. I remain bullish on the dollar, although it's probably due for a good pullback. But I am still bullish on the dollar. I had a nice rise today. These are my targets for the dollar. This is my first one, the 97. And then looking at this as a rising wedge, if it does break up here, it could go as high as 98. Maybe a little higher. The big picture on the dollar, you guys know I watched this chart here. Next time the dollar touches up here, I think that'll be the bottom of the market's cycle. And this is the dollar in green here. That's the way I'm looking at it. Make sure you subscribe to the channel if you haven't already. Smash that thumbs up. And check out PHEMEX BT if you guys are interested in trading. By far the best trading exchange. In my opinion, you can trade Forex, gold, silver, oil, S&P, Dow Jones, Bitcoin, Litecoin, Ethereum, some alts on here, all kinds of stuff. They do also have a copy trading, and you can set your charts up. Oh, another thing I wanted to mention about them, they put a new app out. So if you're playing with the old phone app, make sure you download the new one. Much better. Definitely check it out. And you can use my promo code SAVVY50 to get you 50% on top of whatever you deposit as a bonus. Use towards your margins. SAVVY25 will get you 25% off your fees. There is a tutorial on my page right here. If you go to my page, scroll down, you'll see it. PHEMEX BT trading tutorial. It teaches you how to use the adjust your leverage. A lot of people don't get that. But anyways, just wanted to put that out there. Thanks again for watching. Don't forget to smash the likes, guys. Have a great day, and I will see you tomorrow.